Well, hello there, traders and investors. I'm L.A. Little, and this is your weekly NeoTA wrap. We take a look at these markets, and we're doing it from a neoclassical perspective. That means each week we ask ourselves what happened in the prior week. What might it tell us about the coming ones? I do this show every Sunday evening, be at or before 10 o'clock Eastern Time. It's archived on YouTube. Sign up for channel L.A. Little, and if you want to subscribe, just reach up in the right-hand corner and do so. Anytime I push content, you'll get a notification. And as far as what happened last week, let's take a look at the numbers. No big real surprise here. What you saw on Friday was a big push to the downside. 6% in Germany, 8% in France. You took it on the nose in Europe as well. I mean in Hong Kong as well. A little bit down on the Shanghai, not that bad. Here in the States, 4% to 3.5% depending on where you look. And if you look at the opposite side of the equation, it was an escape to bonds, an escape to the dollar, an escape to gold and silver. Folks, it was an ugly day, and that's the question, is what are we going to do next after the bloodbath? Clearly, the market did not expect a push down on the indexes, and in fact, if anything, the markets were looking for the Brexit to be a stay vote, not a go vote. And that caught everybody by surprise. They pretty much priced it in. I mean, if you just look at the charts and look at the way this thing traded, 2 weeks ago there was the fear that Brexit was going to take place, and I'm looking here on the S&P. You're going to see the same thing mirrored in Europe if you look at it. Then they said, no, they're going to stay, right? So all we have to do is run it back up to where it was. And then, of course, the vote was no. You take 3.5% off the S&P on that move. And what do? You break a swing point low on the way down. You can see that here with the green arrow. Closes, has volume on it. Big wide price spread bar, big volume. That says you're not trading back up to those highs anytime soon. The other big thing that happened last week, if you look at the longer term charts here at the weekly, is that once more, this is how many weeks did we do it? You got up here this many times. 1, 2, 3, 4, 5 times, and actually last week made number 6 as we tried to get over that breakdown bar that I'd pointed out to you some time back. We tried it several times, couldn't get over it. We break down below it. Volume starts to expand on this escalation lower. Folks, that is resistance. It was the key resistance. It is the area I told you to focus on. And it, in fact, turned prices back one more time. So let's ask ourselves what's going to happen next. Well, the most obvious thing here is that you have a very similar picture to what you saw last year, right? When we started to break down last year, you have a very same sort of picture taking place again, right? You get the run-up, you get the consolidation, and then you get the breakdown. And so the question is that's what's going to come, right? Is the consolidation going to lead to a breakdown? And the way the markets work is that if you can't take it up, if you can't break it out, if you can't consolidate and push higher, right? If this is not what's in the cards, well, folks, they're going to try to take it the other way. And so you have to expect that that's a potential possibility coming out of all this. If you look overseas, you might get some clues, so let's take a look at that. And to do that, we'll move over to the London Exchange. Now, the London Exchange is not the best exchange to look at, but I suspect people are looking at this and saying, oh, well, London didn't think it was so bad. Well, the truth of the matter is that the London Exchange is much more about commodities than it is about financials and the other things that everybody thinks of London as. And so what you had is you had a huge sell-off to start the day, 5,700. They closed it at 61. The day prior was 63. So even though you got a big long tail, you got a huge volume. What that tells you anytime you see this is that's the trading range probably for some time to come. So when I look at London, even though it closed way off the lows, just tells me it can go back down there and test them at some point. So even though it's not the best representation of what's probably going to happen elsewhere, even so, it's an indication that you're going to see some more grief and some more pain to come in the coming days. If you move over to where you see a clearer indication of what the implications are, we can go to Germany to see that. So Germany, prior day's high, 10,340. Next day's low, 9,226. What is that? That's over 1,000-point move to the downside. Didn't close down there, but you dropped off more than 10%, about 12% at the lows. You end down 6% plus, almost 7%. Does it break the swing point lows down here? No, it doesn't. Does that mean it can actually come down and break them? Yeah, sure it can. If you pull it over and look at the weekly, you've got a bearish engulfing almost top to bottom, candle, dark candle part of it. Volume expands. You hit into the highs of the lows, and you're pushing volume. That tells me that before this is over, it's going to test these lows, and that's down around 8,700. If we look at the France index, the push down here, same sort of thing on volume. Let's look at the weekly here, same sort of thing here, and you're into the bar. So folks, you got to expect this thing to push lower over time. And so what that tells me is the US markets are not an island unto themselves, and you got this kind of pressure in Europe. I suspect you're going to see continued pressure as we go forward in our markets as well. Where do you escape to? Well, you might think gold, you might think silver, you might think a few other places. Where do you want to get out of? Well, I've made that clear to members in the weekend broadcast to those, telling them specifically where the targets are on the bounce, the targets to the downside, and where they ought to get out of on that bounce. So, if you're really trading the markets, you want to learn more, you want to know how neoclassical works, you really ought to come over, hit the Get Started button for $19 a month. It's a cheap way to get an education as well as a guidance, and I don't know that anybody can go wrong at $19 a month. So join me. Join the members here at TA Today. Set yourself up for membership to where you can enter the mentoring program. Just click the button here to learn more about that. And if you really just want advice on long-term portfolios, we have a retirement service that's all about that. You might want to check that out as well. That's it for this week. Expect more pressure and more volatility. I suspect that's what you're going to see. Have a great one, and I'll see you next time. Good night.